Yo, what's good guys? Mo here, welcome back to another video. So today I want to go over a strategy that I've been using for quite a long time. I'm sure a lot of you guys know what it is in my signals group, right? But I just decided to make a quick video. Well, I'm not sure if it's going to be quick, but we're going to have to see. This video could be just one big long video, or it could be broken up into different separate videos. So this could be a series. We're going to have to see, right? So the biggest question that most of you guys are going to ask straight away, and you want to hear this at the start of the video, is this for swing trading, scalping, day trading, etc., right? And I'm going to say that literally you can use this for anything. That's the great thing about the strategy. You can use this for anything at all, right? Now, obviously, I wouldn't recommend day trading and swing trading. With this, scalping isn't the most high probable, but it definitely does work. And I will show you guys some examples of some setups we were able to catch, right? So the most important thing is that you want to be looking at the daily, the 4-hour, and the hourly time frame, because that's where you're going to be sniping them trades off of, right? So we're going to get right into it. And the first thing that you want to do, right, is I want you guys to ask yourself a question right now. Ask yourselves, who do you think controls these markets, right? The first thing that I want to tell you guys is that it's definitely not the retailers, right? It's not all of us placing our little 10-cent lots or standards or even 10 lots that are moving these markets. There's clearly some sort of entity that's moving this, right? These huge big moves. Like, let's not even look at the 1 hour, but clearly all these big swings, right? These higher highs, these higher lows, these drops, etc., right? These big moves, especially these big candles, that's not retail traders, right? So there's something out here that's moving it. And basically all it is, I'm not going to get into the deep theory behind this, etc. I just want you guys to understand that this is not retail traders, that the banks, institutions, right? It's the smart money that's moving this, right? Smart money, dumb money. I'm pretty sure you guys have heard this concept if you are watching any institutional videos, etc., right? Smart money, dumb money. Smart money controls this. Smart money are the banks, the big institutions, the people that have, right? The people that have the big money. If you look it up right now, who controls the Forex markets, you're going to see banks like, I don't even know, like yours. You're going to see banks like, I can't even remember the banks. Right, so if we look up who owns the Forex markets, or not who controls the Forex markets, the biggest players in the Forex market, right? And you can see big banks like Deutsche Bank, UBS, Bank of America. Now I don't even know these banks because obviously I'm not living in the US or the UK, so I wouldn't know about these banks. But these big banks right here, they're the ones that control the markets, right? So that's the first thing that you want to understand. So to get right into this strategy, right, and how to go about it, and leaving all that theory behind, you want to look at the daily time frame. That's the first thing that you want to look at, the daily time frame, right? You want to understand that you want to be trading along with the trend, right? That's simple. We all know that you want to be trading along with the trend. I also want to go over the fact that you have to understand the concept of liquidity, right? So right here, really quickly, if we go, right, and we draw two lines, and this is a simple concept that most of y'all know, it's support and resistance, right? Simple. So people sell here at resistance and they buy at support. So once you're selling and buying, just really quickly, I'm going to go over this, right? You're selling here, you're buying here, you're selling here, buying here. So what's happening right here? Boom, sell, sell, sell. Once you're selling, where are the retailers placing their stop losses? Your stop losses are all going up here, right? Boom, money. All your stop losses are creating money right here, right? This is creating liquidity in the market, right? Boom, money here, money there, money there. Have you ever noticed when you're trading, right? You're trading these type of breakouts, whatever, and you see that price breaks out in one of the directions, right? You see this sort of price action, right? You see this, boom, huge breakout, right? Fakes out, and you're trying to buy, right? You're trying to buy either here at this support, and there's also people that are placing their sell stops that are trying to trade this breakout. They both get clapped, right? The buy limits here that are trying to buy from the support, they get clapped. The sell stops, they get triggered, but they go up against you. And you get this sort of price action. Price goes up, right? And it continues up. And then it might follow this resistance, boom, comes back down and then pushes up. Something like that, right? This is a quick example. So I'm going to give you guys a live example of this in the markets right now. So I want you guys to, first of all, as I said, understand the concept of liquidity and to train yourselves right here. These equal highs. People will be selling because price comes up, they sell. Price comes up, they sell. There's going to be liquidity around here. You have to keep that in mind, right? It works as resistance sometimes. I'm not saying support and resistance doesn't work at all, but you have to be at that level of consciousness where you understand that there's definitely something else that's moving these markets. It's not the retail traders, right? It's not us at all. So we do have to understand the concept of liquidity and where people's stop losses are. And they're the biggest price drivers where stop losses are placed because the banks want to stop you, right? It's not personal, but they want to stop you because they want your they want the liquidity in the market, right? They want to be able to push price to their places in big moves, right? So they're always going to be attracted to these areas of liquidity right here. All right. The next thing that you want to identify after identifying your areas of liquidity. So for example, if we are identifying our areas of liquidity right here would be this low, right? This kind of double bottom right here. Just like that. And if we were selling right here, then all this area right here, right? So this area of liquidity as well. Lots of lows. Boom. So if you're looking at the daily time frame, this is why we mark out areas of liquidity. We mark out areas of liquidity because we can use them as our take profit. So for example, quickly, if you like sold from here, where would the most logical place to place your take profit? You can either place it down here, or if you're really looking long term, you can place it all the way down here for 500 pips, right? This support, right? This area of support, this area of liquidity. You can take a look at this from two different perspectives. Retail traders consider this support. Smart money institutional traders consider this liquidity. I like to look at things from both sides, right? I like to give my institutional and smart money trading a retail twist and both combine them together to make the best out of two worlds, because I believe that you shouldn't really close yourself off to one thing, and everyone should be able to develop kind of their own way of trading, their own strategy, just by mixing up strategies. You know, I'm not telling you to go out and just create this whole new indicator by yourself. I'm just saying to actually learn a couple of strategies and see what works best, and maybe like take a bit and the best of both worlds. So that's what I'm telling you guys to do. Right. So as I said, areas of liquidity, good targets, right? The next thing that I want you guys to understand, and I know that I might be going over this very quickly, but keep watching the other videos. Over the next few videos that will be coming out, we'll be going into each and every one of these we'll be going over each and every one of these little aspects and concepts in detail, right? And they're also gone into detail on our Smart Money course that you can get access to down in the description below, guys. But we're gonna have to see where this series takes us, right? Because obviously it's the start of it. So the next concept that you want to get your mind around is the institutional candle, right? So I'm going to take you guys away from your JPY. I'm going to move on to the USD MXN, which we caught a beautiful trade on this morning with the team in our signals group. So we were able to catch around 400 pips alone, right? We were able to catch 400 pips on USD MXN today, and this is how we were able to do it. So straight away we went onto the daily. We were able to identify the trend, right? So we realized, we looked at the structure, market created higher high, higher low. It didn't really create a higher high because it didn't close above it, so we were looking for price to come down. Once we saw 4 down candles, right, came around here, and we were able to buy from this 4-hour candle, right? So we were able to catch a buy on from this area right here, right? Then price kept doing its thing, creating higher highs, higher lows. Then slowly but surely kind of price was creeping up. Today gave us that nice big push to this area right here. So this is another institutional candle, and I'm going to explain institutional candles right now to you guys, right? So if we take a look at the 1 hour, we were able to identify, as I said, that we are clearly in an upward direction. If we draw quick trend channels just like that, just to give you an idea, it doesn't have to be perfect or anything. right? And draw another one right here quickly. Just something quick like that, right? So you can clearly see that we are in an uptrend, right? So price came up, and this is the area we were looking for the buy right here, right? We were looking at this area right here. So price came up, it touched the top of this trend channel, went back down, right? Touched this area of resistance right here. So we all know that broken resistance becomes newly found support. So right here you could have bought from, right? You could have bought from right here, but if you're not confident enough in just using support and resistance, which I definitely don't recommend just to use support and resistance, you could have waited for this sort of price action, right? So you could have bought from here. We noticed that we had a very strong, right, bullish candle after that, right? So we had this last down candle before the up move. This got engulfed, right? You don't enter just because it got engulfed. So you wouldn't enter up here. We're trying to look for the best entry possible. So price continued for the next 2 hours. Then it created this big down wick. Now here is where entry takes place, this big down wick. If we take a look at the 5 minute, right, price went to this support, pushed up, came back down, bam, wick down here. Straight away, the minute our entry got triggered, bam, 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 3 big bullish candles, just like that. So if we take a look back on the 1 hour, this would be our candle, right? This would be our entry candle. Why? Because it's the last down candle before the up move. This is called the institutional candle. This is the area where smart money bought. This was the area where smart money last sold to buy, right? So they have to sell to buy. They can't just place direct orders into the market, right? They have to be able to accumulate and distribute their positions. So this area, this candle right here is called the institutional candle because you can see it's very, very strong 3 bearish consecutive candles. Once we have 3 bearish consecutive candles, right, making up or close to the institutional candle, right, we know that clearly the smart money was in play. We see right here that price was consolidating, right, up and down. It was kind of in a range, just like that. Then boom, price broke down to the downside. Breakout traders would have tried to sell this, right, especially on the small time frames, but no, boom, took out the liquidity from the bottom. What did I say? If people, a lot of people, all a range is doing, right, all a consolidation is doing is creating liquidity on the top and creating liquidity on the bottom, just like that. So price broke out, took out the liquidity from down here. And it would have been taking out the liquidity from here. Another concept that we go over in our course, but I'm not going to go over here, is the 3 market phases, right? So we have the contraction, the expansion, and then the big push, right? The trend, which it'll be covered in our course. But for the guys that know what this is another perfect example here. So we had the contraction, expansion, and the big push up, right? So what did price do? Price always has to come back down and retest that last bearish down candle before the up move. Why? Because the banks, right, and the big institutions placed buy orders here, right? So they were in drawdown, so they do have to come back down and they have to mitigate their orders out at break even, right? This could take 2 hours, as you saw here. This could sometimes take weeks or months, right? So they have to mitigate their orders out at break even. That's why they have to come back down. So we call this play right here the mitigation play, right? So this candle got mitigated out of. This would be our entry. Bam, smack. Entered right here. Our stop loss below the candle, 76 pips, and we could have aimed for all the way up here. We literally we would have aimed for, let me check the 4 hour, we would have aimed for just about here, right? So for 456, take profit, just like that. Why would we have targeted this area? Because institutional candles can also be used as targets. So the same example that I showed you guys, right? The last down candle before the up move, right? This was the last down candle before the up move. This again could be used for another buy setup on USD MXN. So you could be looking to buy once price comes back down and pushes up off here. But it worked for us on the 1 hour. We bought from here, boom, perfect. To take a look at another example, we could have bought to sell right here. So what did we have? On the 4 hour time frame, we had this big FU candle, which is the candle that took out the liquidity, right? This big high, right? This major high right here. We would have had liquidity sitting on top of this. So what did we have? We had that big push up that took out the liquidity and a big down move, bearish engulfing, right? And we would have waited for the mitigation play on this. So where are we looking to enter? And I forgot to mention, we're looking to enter on the open or the 50% candle, because that's where the majority of the volume is, right? So we're looking to enter on the open or the 50%. To identify where the 50% on the candle is, just use your fib tool. All right, so right here, entered on the open of the candle. This would be our institutional candle. This is where we look to sell liquidity, right? And right here, we'd look to sell from here. Just delete all this garbage. So this was a buy to sell scenario. Stop loss on this would have been huge, so definitely would have recommended a much lower lot size, or you could have placed your stop loss somewhere around here, because realistically if price came up all the way here, I don't see price coming back down anytime soon. This could have been a short sell anyways, because I do believe that price is still very bullish on USD MXN, but you could have targeted somewhere around here, right? You could have targeted this previous support, right, on the 1 hour for a nice 302 pips. And what's price doing right now? Price wicked into our entry, and away it goes. It's dropping nicely, and now obviously it's a Friday. The market literally just closed 10 minutes ago, so obviously it's not going to be moving now, but this was a beautiful sell. Would have been up running 210 pips right now. Literally only took 3 hours to do this, so that's how you couldn't have gotten your entry in. Now we obviously use much more other confirmations. We use the fib tool, we can use the wick off method. There's just so much more to be able to add to this concept, but the main concept that you have to understand is the concept of institutional candles and the last bearish candle before the down move, right? The last up candle before the down move to sell, or the last down candle before the up move to buy. And that's the main concept that you want to understand. And then you can add your own confirmations. You can also add like whatever your MAs. For example, I have 100 MA on right here. So if price is above the 100 MA, then you want to be looking to buy. Price is below, you want to looking to sell. The fib tool to find areas of discount premium. And we go over all of this on our Smart Money course, guys. So as I said, if you want to get access, make sure to sign up in the link down below. It comes free with our signals package. Our signals group was actually able to cash in about, let me bring it up really quickly. So here's a signals group, some of the trades we send out. So we always send out our charts, right? We send in the trade. We also sometimes send in the analysis with the trades, right? So for example, oops, went all the way up to top, right? So sometimes we send the analysis like this with the trades, right? And we were able to cash in a nice 635 pips with a minus 65 pips loss this week. So less trades sent this week, but we do believe in quality over quantity, and it played out really nicely for us, especially with the coronavirus times, right? So that was really good. Right, so I'm going to take you guys through a couple of more examples that we were able to catch. So another trade that we were able to catch with the team was USD CAD sell, right? So we were able to catch the USD CAD sell, right? So first thing that we wanted to look at was the 4 hour time frame. We saw that we were in a nice beautiful trend channel, right, going to the upside, right, bullish. We went down to the 2 hour. We were able to snipe this off 2 hour, and you have to understand and be able to kind of look at your institutional candles from different time frames. It's really important, because if you looked at it right here on the 1 hour, you wouldn't have been able to catch the last up move before the last up candle before the down move. This looked better on the 2 hour time frame for us, right? So we had this boom kind of contraction, right? Just normal consolidation, then boom, big bullish up move, right? Very reactive, huge, volatile, took out all this liquidity, right? So these equal highs that would obviously show on the 15-minute time frame. Right, so we had liquidity sitting up above these highs, right? Boom, just like that. And then price shot up above, boom, took out all of this liquidity and shot down, right? So what do we wait for? We wait for the mitigation for price to come back up, so we are able to sell. And that's exactly what we did on the 2-hour time frame. So if we take a look on the 2-hour time frame, price came up, beautifully touched at the open of the candle, stop loss above here, boom, 44 pips. And now our stop losses are usually much smaller. It's just that these days obviously the market is much more volatile, the candles are bigger, so our stops are having to be a bit bigger. But before all this started, our stops were so small, literally like 20 pips, sometimes 15 pips, right? So it's literally great. So our stop above this candle, and you're looking for the entry on the open of the candle, right? So big down move, mitigation, bam. Mitigator here, dropped. Price decided to come back one more time, and then it dropped nicely. Where could we have aimed for? Could I aim for this support right here, right? This support. And this happened to be the end of this trend channel as well. And this was a great area to buy from right here. So we were actually able to catch a buy on this too as well, right? Using the support on the 1 hour time frame. Or you could have tried to use this institutional candle, right? But you had to make sure that your stop was a tiny bit bigger, or you probably would have gotten taken out due to the spreads on this trade. So you saw that, boom, this last down candle before the up move, but price came around here, boom, shot up, retraced back down one more time. And if we take a look at the 15-minute time frame, here's another example. What do we have here, guys? This is such a perfect example. Once again, I was able to spot this right there. The last down candle before the up move, institutional candle that took out here. Price came up, boom, shot down beautifully, lined up with the trend line, right? The institutional candle, the open of this institutional candle, you could have bought right here once again, right? And you could have aimed for this high to be taken out. Boom, your take profit would have gotten triggered easily for a nice 85 pips. So trading honestly just doesn't have to be made hard at all. You don't need all these indicators. It's as simple as drawing a few lines, understanding your entry candle, which is the last down candle before the up move. Another example right here on the small time frame. If you wanted to scalp, what do we have here, right? Now obviously this is not a 100% win strategy. Sometimes the market just isn't going to give you what you want, right? Sometimes it's just not going to work out. You just have to make sure that literally, like if you enter a trade right now, right, if you just entered a sell or a buy, what are the chances that you're going to win? They're 50-50, right? They're always going to be 50-50. And then you're trying to add in your confirmations. You're trying to add in your confirmations and make that 60%, 70%. Sometimes it doesn't work. That's perfect because you're risk managing, right? You're not over leveraging, right? You do understand that this strategy is not going to be a 100% win rate. You're not going to have a 100% anything, but does have a very, very high win rate. And we do tend to win most of our trades, right? So what do we have here on the smaller time frames? If you want to scalp this, lows, price went up, boom, shot down, took out these, big bullish engulfing candle, price retested here, and you could have bought from here. So obviously it would only be 6-7 pips in profit, but obviously closed because of the market. But this would have been another perfect opportunity to buy up from here. All right, I'm going to keep giving you guys a few more examples just to show you guys that this is easily duplicated. Once you're able to see this, right, once you're able to see this, it's the best strategy that I've ever come across. I've been using this for years, literally learned this, and then I was able to, after learning it and mastering it, right, I was able to then add my own twist into it. I was able to bring retail into this, right? So I know that a lot of people just use retail alone, these trend channels alone, etc. And I know a lot of people use just the smart money concept alone, the institutional candles, etc. But I was able to kind of incorporate this and teach this to my team using support resistance with these institutional candles. We also have a lot of other concepts that this strategy incorporates. So like, for example, imbalances using the Fibonacci tool, as I said, but I won't be covering this. I'm only covering the minimum basics on how to enter this. Just keep it short and sweet for you guys. And if you guys want to get more information on this strategy, then as I said, it'll be provided all in the course, right? So I want to go over a couple of more examples for you guys. So we're going to take a look at another trade that we were able to catch for the week. Really quickly, here's a free signal. I think GN is a beautiful sell off this 4 hour candle, right? So equal highs, triple top, fume, shot up, FU candle, big drop. So this could be a nice sell scenario from here, right? Just like that, 84 pips. You can aim for this support, just like that, in a down kind of structure, even though it's very very kind of slow, but it's still going down, right? Something like that. Take a look. Yeah, so it didn't fail to create a higher high, failed to create a higher high, so we're in a downward trend, right? So you could be looking to sell from this area right here. Your JPY, once again, going to go over one more for you guys. What did we have now? This wouldn't have worked out the best. I wouldn't have recommended taking this, even though I personally took this, right? And I sent it out to their team. I'm actually going to show you guys right now. So we're having new members in every single day, so it's great, 72 members. But I'm going to show you guys really quickly. I sent into the team, bought, right? So I said bought, and this wasn't a signal. This was just an educational trade, and I bought it from this area right here. All right, bought it from this area at 308. Now it's 22.21, right? So we bought from this candle, and look at price right now. Beautifully came back down to the last down candle before the up move, right? The open candle touched it, and away it goes. So currently right now I'm up 46 pips in profit, and I'll be holding this. Could actually react from this last up candle for down move because we are in downward structure. So I think I will take profit at the open of the next trading session right here. So down trend, right? This would have been a bit more risky because we were kind of trading against the trend, but it was just a mini kind of just a quick 50 pips and get out. Stop would have been under here, 25 pips. So beautiful, mitigated out of here, and price pushed up neatly. Now touch the top of this trend channel, so price could very much so just start dropping again. So we'll be taking profit. I will be taking profit from this trade straight away, right? So that's pretty much it. I hope you guys gained a bit of value from this somewhat short lesson, right? 30 minutes, but definitely hope that you gained something new. Maybe you understand this marketing concepts, maybe you understand the retail concepts already, but just being able to incorporate them both. Hopefully you guys are able to come up with your own trading strategies, right? So I'd like to thank everyone for tuning in, and I'll catch you guys all on the next video.